Okay, just hold on to those thoughts. Just as quickly go across to the management of Ceat because they are joining us live to speak about the numbers. And the stock is down close to 5.5 to 6% in trade, if I'm not wrong. But Paras Chowdhary of Ceat joins us right now to speak about the numbers. Mr. Chowdhary, thanks so much for joining in. If I look at a quarter-on-quarter basis, it may not be the right way to look at it, but just looking at a quarter-on-quarter basis, which should probably give an indication of how much of an impact crude and rubber prices have had, there has been a severe decline in profitability. Is it a serious problem for you over the next couple of quarters as well?
Our industry is going through a traumatic period, and our company has also gone through the same. If you look at from quarter 3 to quarter 4, our raw material cost has risen by approximately 11%, and the price increase that we got on our finished product was close to only 5%. So there has been a dent in the margin. Our quarter 3 performance was also not great, but on that performance also we have dented further. So our margins have come down, and naturally for the quarter we incurred a loss. For the whole year we have made a profit after tax of 22.3 crores, which is substantially lower than the previous year.
Which brings me to
the raw material situation. The raw material situation continues to be pretty grim, because even after quarter 4 the raw material cost continues to move up, and so far there appears to be no respite from there. Rubber continues to trade at an unprecedented level, which has neither been heard of in the past nor was practical, but we have been at that level for some time. But we are hopeful that from July-August time frame, rubber prices are likely to stabilize to a lower level, and from then on we will be in a better position.
Just wondering, Mr. Chowdhary, did you clock in positive margins this quarter, and if so, would you be able to at least do that in the next couple of quarters?
We have two issues which I think have to be clearly understood. One is that our halol production has just started. We started commercial production in halol in the month of March. So we will have the benefit of halol production going forward in the coming quarters. But in the first quarter of the current financial year, the halol capacity utilization will be close to only about 40 or 50%. So in the first quarter, on a PBT basis, halol will incur a loss. But going forward from quarter 2 or quarter 3, halol will start kicking in a positive PBT situation. So the margins will improve after some time. And it's a large plant. The interest and depreciation of this plant is quite substantial. That is point 1. Point 2, the raw material situation is continuing to be tough. We are going to see further increase in the raw material cost compared to quarter 4. So to that extent the margins will remain under pressure in quarter 1. But after that we are hopeful that raw material situation will become a little better, because we don't expect rubber prices to hold on to the current level after quarter 1. So going forward from July, we are hopeful that the situation will be better. That is another reason. And also we have had some price increases which came towards the end of April, and those price increases have been substantial in all the 3 segments, that is export, OE and replacement. So we will see some improvement in the margin from quarter 2 onwards, but I am afraid quarter 1 will remain more or less like quarter 4.
Right, so can you quantify your margins in this quarter gone by, and when you talk of an improvement, how much are you anticipating, even if you keep the worst case scenario of raw material constant?
Raw material will not be constant. Raw material situation is going to be adverse in the coming quarter as well, because raw material cost is expected to move up further. Whatever raw material cost we have seen in quarter 4, it should see at least a 5% further rise. But fortunately the tire prices are also going up, and they are likely to raise more than 5%. So at the operating profit level we should see a minor improvement. But as I said, that interest and depreciation are going to be larger. So at the PBT level, even in Q1, I don't expect any improvement in the profitability that we have reported for quarter 4. We will more or less stay at the same level, but at the operating profit level we will have improvement.
Sure. Just want to know from you as well, what exactly is your demand situation right now? Has the demand by any means impacted by the kind of high prices, that you had to undertake because of the hike in raw material prices? And going forward, to probably just nullify the effect of the raw material prices, will you also be taking on further price hikes?
Look, on the demand side, let me clarify, the export demand and OE demand continues to be robust. Replacement demand for non-truck tires is also robust, but where we are getting hurt is the truck tire demand for the old technology tire, what we refer to as cross-fly truck tires. Our revenue has been largely dependent on cross-fly truck tires historically, and even now we get almost over 55% of the revenue from cross-fly truck tires, and that is the segment which is suffering. And the suffering is because the demand is not showing very strong at this point of time, and to some extent radials is cannibalizing on this demand. And the other reason has been that industrial production, mining activity, etc. has been at low level, and that is clearly visible in the marketplace. So cross-fly truck demand is a little weak. All other segments are showing good demand at this point of time.
All right, Mr. Chowdhary, we'll leave it at that. Thanks very much for joining us and throwing some more light on how the quarter gone by has shaped up for you. Yes, there will be continued pressure going forward, but could expect some bit of a respite come July, where you could see some moderation in the rubber prices, and also Halol to probably become a PBT positive for them going forward as well. So Ceat right now, on the kind of numbers that they've just posted, 6.5% lower. We'll discuss all of this and more. In fact, just get an opinion from Ashwini itself on Ceat after it's plummeted almost 6.5%. Ashwini, a quick chart check.
Well, tire stocks, after doing well in the last few days, have started now declining, and Ceat could easily see another 10-15% downside from these levels. Clearly, whenever margins will be under pressure, you see these stocks coming down. 90 is now the support. If 90 goes, then you're probably looking at levels of 65, 70.
All right, 90 is the level, a break of which 65, 70 is also a possibility on Ceat. Take a short break, come back, and we'll talk more stocks.